All right, very cool. Obviously, an incredibly down day. I wanted to kick on here and start with OBS and try to get the live streaming down. I do apologize for you guys that kicked over there. I obviously just wanted to address the community, so I'll give it a couple minutes and allow people to kick over here. Honestly, there should have been really no level of panic today with regard to my community at all. I do feel like, in retrospect, over the last 3 years, I've always said that these times were on their way, and there's two sides to every stock market. And I think I was kind of the bad guy there for a while, honestly, talking about having two sides to the stock market and really making your moves based on the dual personality of the market, honestly. But certainly some interesting comments that have come through the channel. I'm actually very, very encouraged to hear about a lot of the different moves that are being made right now along the defensive spectrum. But I thought I'd get together tonight for just an hour or so. Obviously, I'm going to try to troubleshoot that on the OBS streaming. And that way, when I do my own live streaming without the complement of guests on the live stream, I can actually take you guys into websites and show you a little bit easier about some of the things that I use to actually help me deliberate in the market. A lot of the deliberation comes well in advance of the market doing this today. If you guys want to know short fuse what I did today, 10 shares of the Vanguard's S&P 500. That was definitely wanted to do some buying today off 2,000 points on the Dow. So some strategic buying here over the last couple weeks. I just wanted to touch base with you guys. I know you appreciate, and I know there's a lot of folks that have come with some very interesting opinions, honestly. And I typically don't offer any type of dialogue which would make my audience think that I know which way the direction of the stock market goes. It's always amazing to me the number of people who do think that they know. I guess I'm perhaps one of the few people on YouTube that will come on and admit to not knowing, and I think that's part of the strategy and part of the challenge in the stock market, honestly, is to prepare to win in both up and down markets. I'll continue to allow some folks to make their way in here. I do apologize. All the comments got scrubbed. Obviously, that was a test tube situation on the last one, and I'm not looking to upload this until after we're all done. So you guys will get to enjoy a live stream here and an opportunity with me free of commercials. But coming off an extremely positive Friday live stream, we will be getting together again as well this Friday for the normal collaborative live stream. So please keep that in mind. I'll set the seed for anybody out there that's wanting to kick on with me on Friday and help me negotiate the live stream. But I had a lot of things to say tonight to the group to make sure that we're staying grounded, honestly, making sure that our focus is where it needs to be. Honestly, your focus should probably be on 1,000 other things rather than the stock market at this point. And you might think it's fairly crazy for me to say that. I will acknowledge that anybody that's been in the market for less than 6 months is being rudely anointed. That's for sure. I will acknowledge that. This has been probably one of the most volatile downturns I think I've ever been through or ever experienced in my investing career. And that's totally fine. I think the message is that you treat them all the same. I think there's different personalities to each of the triggers that are entered into the market over the course of the last 5 or 6 decades that we can track back and look at. And I really want you to use this opportunity. If you've had less than 6 months in the market and you haven't been with me for very long, I'm certainly going to be deploying a fairly aggressive strategy to make sure that we are enjoying investing the way that it should be nowadays. And When I started, I didn't have the support structure or the support community to come into and throw some of your ideas into a group like this. Shoot, I work pretty hard in providing a pretty frequent upload schedule, and I don't think a Friday live stream is frequent enough, but that's what kind of time I have to give. And if it if it suits you at all and you can parlay some time out of your schedule to at least make part of that live stream, kick in some questions. Certainly, that's a great repository for your questions. I usually do a pretty good job of answering those, and then you can catch them afterwards if you'd like. Put it in your ear and listen to some of the great thoughts that are coming together in this community. But some pretty cutting edge ways of gaining support, whereas the old school way, honestly, of approaching a violent market like this would have been to approach it on your own. And it's a little bit different. Your mind will play tricks on you a little bit when you're looking at your program, and your program was really, really solid January 6th of 2020. And now you're looking at that exact same program and it looks a little bit different to you. And you're going through deliberations, mental deliberations that typically work for anything in life. Unfortunately, the stock market is a 100% mental game, 100%. It has nothing to do with your physical capability. It doesn't mean, it doesn't, lay down for you if you think that the life owes you something. The stock market has no emotion, so you really need to have no emotion when you're deliberating around the stock market, for sure. It's super, super important that you remain calm during these times. Put your attention on other things. It takes a seasoned investor. I do monitor my portfolio through this. I'm entertained by it, to be honest with you. I tend to separate what it is I'm acknowledging in my stock portfolio and what's going on around the world. And if you've got the maturity to look at those things in a separate light and understand that, yes, the two are kind of speaking to each other right now. I mean, my heart goes out to people that are affected by this, but at the same time, business is business. And if you can tell me that this sell-off is justified based on fundamentals, and that the fundamentals have switched on a dime in the last month and a half or so, I think you'd be hard pressed to convince me that it's justified in nature. I think the stock market right now is pricing in somewhat of a recessionary condition, and we may end up there. Who knows? I'm not trying to talk the market off of going one way or the other. What I've always said is the market's going to do what the market's going to do no matter what. No matter what. I've probably injected into this market now probably 6 or 7 times in strategic buy increments. I didn't buy all at once. I spread the money out a little bit. The Roth IRAs are kind of fully funded right now a little bit. I mean, it's stretching me thin just a touch to give you just a little bit of a page out of my playbook. And the moves that I've made over the last 2 weeks, they will pay off. The time will be the natural ingredient there that will make all of those purchases over the last couple of weeks wins over the long term. There's no doubt in my mind. Now, the better the buy and the better your ability to time the market, right, will return those losses quicker to you. And that's one way of thinking about it. I've heard a lot of people that they're saying you're throwing money into a vacuum. I absolutely disagree with that. Every dollar that a stock price depreciates, you're getting that stock price at a cheaper price. And some of these stocks are really off. I tell you what, some of the beaten down sectors right now, I'm really, really interested. It's interesting because the cruise industry and the airline industry is typically a couple of industries that I don't invest in normally. And there's reasons for that. Whenever there's a malfunction on the airline side of the house, you'll pay. Whenever a cruise ship goes aground, you'll pay. The ironic part about this, in especially the cruise industry has never been so strong. So with that said, I think Carnival Cruise Line right now is trading at 6 or 7 times earnings. So, being deliberate about monitoring your stock portfolio as a new investor, it does take some maturity. And if it bothers you, don't do it. Okay. Don't succumb to the temptation of watching your money fluctuate, and do what it's going to do in the short term. Honestly, again, to come back to my point about it being very violent right now, it's probably going to do you no good whatsoever, other than the fact that I just like watching the action in the market and kind of seeing, what certain support levels are met and how it kind of holds up and kind of fluctuates during the day. I obviously like to see how my stocks are holding up, and it's been interesting enough. But I really want you guys to understand, and if anybody has been with me for the last 3 years, I do feel somewhat indebted, in that I've done everything that I can possibly do to turn over every single rock with regard to the stock market. While I feel like there's a ton of different channels, there's hundreds of different channels out there that you can tune into and get your motivation from, and all the better to you, or those folks that are following those audiences. That's lovely. I just want to make sure that the percentage of success of people is as high as we can possibly make it. And my benchmark is 100%. I don't think there's anybody at all that has spent any useful time with me, that has paid attention with me, wouldn't have been prepared to enter into a stock market like this. Here's what it would have looked like. Okay. You would have abided by some of the rules of thumb that I've pressed through over the social media community. Some rules of thumb, the half-life rule of thumb. Imagine, while things are all glorious and at all-time highs, that tomorrow you wake up and your stock portfolio is cut in half. Be honest with yourself in this deliberation and ask yourself, how would you respond to such an exercise? Okay. And if you're honest with yourself, that exercise right there can really help you understand your risk tolerance. Okay. Now we're off 20% right here. We're just shy of 20%. 20% will indicate that we're probably into bear market territory. Obviously, we have to have about 6 months of sustained. I highly doubt that we're going to be able to sustain 6 months like this. Possible? Yes, anything's possible. I just highly doubt it. But we are off 20 bits. Let's just call it, give or take a little bit. How did you react? How did you feel? Did you feel exactly the way that you had prepared to feel when everything was hunky-dory in the stock market, and now things are off 20%, and you're looking at your market? Have your goals changed at all? The answer, I think, if you're honest with yourself, is no. But here's the thing. A lot of new investors will succumb to the temptation of thinking that the market is going to go lower and that they can time it. Okay. And this may be true. And the most unfortunate thing is people can actually do it for one day, and then they think that they can duplicate it over and over and over again. And it introduces quite a vicious cycle for new investors, honestly, that really there's not a lot of remedy for, other than getting burned really, really bad in the market. And sooner or later, you realize that as much as you think you've got the stock market under control, or you think you have the velocity or the direction or the momentum figured out, it will turn on a dime and it will prove you wrong. Okay. Now, I don't mean to scare anybody in the community. Obviously, my demeanor is the same as usual. Nothing has changed with my program. Nothing has changed now on March 10th, March 9th, right now, than it was on January 1st of this year or January 1st of last year. My long-term goals have not changed at all. The only thing that's changed, quite frankly, is the fact that the stock market is 20% off of its all-time high. Okay. Now, there are two prudent moves to make, one that is extremely irresponsible. The first two prudent moves, number one, is probably something that new investors need to learn to do more often, and that is to do nothing. Hold. It's the most underappreciated, underacknowledged, underpracticed strategy in the stock market. Remember, if you're going to enter into a downturn like this, remember my insistent on packing that portfolio chucker blocked as full of quality as you possibly can. So if you're going to go into a downturn, go into a downturn with the best of the best companies out there. I really think that's super important, and that'll help you really, really weather the storm when it comes to this volatility. And I can tell you what, guys, as we speak and as I speak until I'm blue in the face, there are absolutely investors out there. I have a hard time calling them investors that are, in fact, panicking right now and selling out of their portfolio, and they will regret it. And here's the thing. I've come to appreciate an attribute that is extremely important in the stock market. You really need to realize that life in and of itself doesn't owe you a thing, okay? If you're going to invest in the stock market, invest in its totality, okay? Don't invest with unrealistic expectations to justify it only when it's good, okay? Now, I'm not saying you have to like it when it's bad. I'm not saying that at all. What I'm saying is to expect that and prepare for it. You'll be much more the wiser for it. And this not only goes into your stock investing style and profile, it doesn't just go into that. It goes into everything in life, everything. I mean, have you ever been hit and knocked down? Have you ever come across a little bit of adversity in your life? Have you come across that adversity only to throw excuses to the wind and talk about how there's no way you can persevere past those barriers in your life? This is probably one of those, and this is going to give you an opportunity to reflect back on this time, no matter how extended it is in nature. And it's probably going to be chalked up as a blip on the radar. It really is. Now, I'm not saying that it's not going to turn into a pandemic. I'm not saying that it's not going to come to fruition for everything that the pundits on TV are telling you that are going to happen. I'm not telling you that North Dakota shouldn't declare a national emergency just like California and New York. There's an underlying joke there if you get it. Okay. I think some of those states could probably work to do a hell of a lot more to clean up their states, and it's really has a lot to do outside of what's going on right now. But I just wanted to address the group tonight. Honestly, I'm going to cruise up here and I'm going to address some of the comments in the live stream. I'm going to go for about an hour. Obviously, this is a quick fuse Monday live stream. But I'm going to cruise to the top here, and I'm going to cruise through. Frazzled Halo says, woohoo. That's what I say, too, on a Monday. Absolutely. I am back. I do apologize. I'm going to try to troubleshoot that. I was against the grid a little bit. I did go running tonight, and I feel like a champion, honestly. I feel like I could probably go and fight a prize fight right now. I feel really good. I feel really healthy. I'm going to have some nice dinner after I'm done with you fine people. But I will try to troubleshoot that to get that under control. It's all like Chinese to me, guys. You can try to figure it out. I'm sure there's a bunch of studs in the audience who've got it all figured out, but I'll figure it out. It'll take me 3 times as long, but no big deal. But Frazzled Halo says, no panic. I've got Kyle with Passive Income Investor. Missed you on Friday for sure, my man. So very cool. Thanks for clicking over and thanks for understanding. Honestly, it's not my strong suit. I've got to get these technological bugs, and I really didn't have enough time, so I was against the grid, and this was my backup plan. So we're on plan 2 right now to address the audience. Check out Dark Waters. So K97 hit me up as well, and I guess it's a documentary on DuPont that's probably worth everybody's time. It's pretty awesome. Thank you for sharing that, K9. It's awesome. Kay leaving work, woot woot. Yep, absolutely. I can't do woot woot. I can't do it. Woot woot. I just can't do it very well. K97 says 3M. I don't know, man. You got your prize for sure. Patience paid off for you. I told you it wouldn't go in the 140s, and it took a pandemic to get you there. So congratulations on your entry price. You got a phenomenal prize there in 3M. And Wells Fargo here in the low 30s is insane. It really is. We're probably talking about half of its value there for how quality of a financial it is. Something to keep in mind that was brought to my attention is the lower interest rates, obviously. So be a little careful with financials. I was looking at Berkshire Hathaway, obviously the Class B shares. I'm not that big of a baller for the A shares, but Berkshire's trading at an anemic 5.6 forward. So if you ever wanted to own another cornerstone in your portfolio, I know it's a Bill Gates favorite. I know Bill and Warren are good friends, and I know he thinks very highly of the company. But Berkshire B, I've never owned, really primarily for the reason that it doesn't pay a dividend. But if you ever fancied a position in Berkshire Hathaway, certainly there for the picking. JP Morgan below 100. I could go on and on and on. If you were ever, it would have benefited you guys to really cover and make stock covering a little bit more of a hobby for you, at least to start those watch lists like I teach upon, and have those available for times like this and volatility. But certainly I'm not going to apologize for my community taking a little strategic stab at this market. And as a matter of fact, I'm not just talking the talk. I'm walking the walk for sure. And again, the timing, it's the only context that I will use timing in, because when you're buying into this heavy volatility, let's be real, guys, are you going to pick the perfect bottom? Probably not. That's why you have to pick multiple inject points and use scale when entering into this market. So just be careful and understand that, this does kind of fall into the definition of catching a falling knife a little bit, but I really do see this storm passing. I really do. And when it does, it's going to be interesting to watch. It's going to be game on, because we've just taken the stock market down aggressively fast. I really have never seen it. That's why I kind of wanted to come on and speak with the community a little bit and cover a group of questions for you guys first of the week, and not wait till the live stream on Friday, because who knows, Friday we could be talking about a completely different market. I don't know. We'll see. I mean, when the new president came into office, we were at 18,000 on the Dow. It'd be really interesting and amazing to see us reach 18 or below. I just don't see that happening. But again, I'm not going to try to put my thumb on potential for this stock market. No way. I won't do that. I really won't. I just think that you're being provided an opportunity now at 23.5, I think is what we settled at. Good grief. I think we settled at the lows of the days. It crept above down 2,000. I don't think I've ever had such a poor paper trading day in the market. Today was a milestone for me. So I may have a drink later. I've earned it. I may not. I don't know. But I know those portfolios out there that are suffering in a relative sense. And I will tell you this, the first trade account for those folks that have portfolios from 1,000 all the way up to 6-figure portfolios, obviously, I don't think there's a whole lot of place to hide in this market. I've had a few comments come through the channel that some of the folks have slipped into SLV and GLD, of course, and the precious metals, and have done well there. But aside from that, if you were lucky enough to be in bonds over the last couple weeks, which have done quite well, I don't think there's a whole lot of place to hide in this market. At least I'm not going to come onto YouTube and profess that I've found the secret corner of the market that's not being drugged down with the entire rest of the market. That's just typically how it works. Great companies that were deemed great in January are being drugged down now with all the chaos. So it's just one of those things you got to kind of shrug it off a little bit. And again, I do declare to you that I do monitor the market, and I have the discipline to do so. But honestly, one side technique that I would employ for you guys, if it's too much for you, just ignore it. It's not going anywhere. Your plan that I talked about, your share base, is not going anywhere. And I think, to be fair about your own risk tolerance and the strength of your portfolio, monitor it 6 months from now. Check in on it. Check in on it a year from now if you're that concerned about it. And I think you'll be surprised at what you see and how quickly it can potentially recover. So just some words of wisdom there. But in the M1 Finance with the sector spiders, I did roll that account out. And that, again, would have been indicative of an account that has had a chance to appreciate since last March. So it can be kind of discouraging for new investors if that's indicative or reflective of, or I built that to kind of mimic what a $2,500 portfolio could look like for a beginning investor, only to gain a little bit all through the year and then to see it all go to the stock gods basically in 2 weeks can be kind of a gut punch. Get used to it. Get used to it. There is a silver lining, and there is an underlying lesson for each and every one of us, myself included, as we evolve and step toward our financial goals in investing. I couldn't imagine life without investing. No way. No way. I would feel like I'm missing out. And if I would see this volatility and I was a non-investor, I'd be in the market anyway. So might as well just do it 100% and live to fight another day. Honestly, when you get punched and you fall down, get the hell back up. Okay, get the hell back up. There's a lot of interesting folks that I talk to, I guess, in my daily interactions, and it's really interesting how being in a position of convenience on the sideline their whole life is somehow safe, or they feel better about that. I'd rather be in the game. I really would. I haven't rendered any of the success in my life by remaining on the sideline for most of it. I've been engaged for most of my life. I've failed. Absolutely. I've fallen on my face many times, and I get back up. And now, quite frankly, I'm kind of carved out of wood, in that you could probably knock me down 1,000 times and I'd get back up. I would wish upon everybody in this community that if there is a potential to toughen up a little bit, again, myself included, to do so. You have my blessing. So if there's any level of lesson that can be taken out of this, that's why typically, if you can really monitor this and learn from it, and know full well that an irrational decision now is going to only turn out to be irrational down the road as well. I know you think it's rational now, and you want to buy into a collective assortment of opinions that are coming into your mind to influence your decision. Honestly, none of that stuff matters. The only thing that matters is the pledge that you've made to yourself when you initiated and put yourself on this investment road that you've put on for yourself. All right. My ETF buy didn't go through. We'll still buy more tomorrow. So Brent with the Financial Investors is a very patient, savvy investor. Certainly patience is of the essence. I, for one, wasn't born with patience. So if anybody has any, they're welcome to send some to me via email. I'd gladly accept it. But patience is not a virtue that I was blessed with. And quite frankly, not relying on patience a lot in my life has actually rendered a lot of the reason why I am where I am, because I'm fairly aggressive, and I get it. I'm always looking for an opportunity. So if there's any way that we could become a little more hungry, it will lend to your investment savvy for sure. you will come out of this tougher. You really will. May not seem like it now, but you will come out of this tougher. And if you want true validation in the stock market, validate it through a downturn. Okay. I always found some of the dialogue interesting while the market was on an all-time high, and there was some dialogue that came through that really made me think that everybody thought that the stock market was like running through a garden of roses or a garden of tulips all the time. And it was just a beautiful thing because it went up every single day. Um, I think if nothing else, this has provided you a little bit more of a holistic definition of what the stock market actually has to dole out from year in and year out. And this won't be the last time that this happens, and we'll be wiser for it going through, and we get a little bit calmer waters, and we can think collectively about where we go next after this chapter is closed. All right. S&P needs to test 2,400. That could be true from a technical perspective. I've got Hoofix Man Martin. That's a pretty cool name. Thanks for popping in here, man. Appreciate it. Short notice. I didn't provide any notice for this. No big deal. Yeah, from a technical perspective, you could be right. There could be support at 2,400. I would assume that that's what you're looking at, is either a 200-day or some level of support there. Perhaps you're right. I don't know. I typically don't speak in definitives about that. I'm one of the very few on YouTube that have put out videos on definitive talk in the market. I'm not one of them. You'll never hear it from me. Of all the amount I can talk on the stock market, you will never, ever hear me say it has to test this level, or it has to do this, or it's going to do this. I don't know. So I prepare for Dow 15,000, just like I prepare for Dow 35,000. And that's how I choose to operate, for sure. Certainly, I do have scenarios and theories that I do test, hypotheses about, where the market could potentially go. What if this thing is prolonged, etc. None of that really means anything with regard to the real play. The market's going to do what it's going to do. But I do appreciate your comment. There's probably a lot of people in this community, a heck of a lot better technicians than I am, for looking at where potential support is in the S&P 500. But I appreciate you offering it nonetheless. Thank you. Bought 5,000 today. Wow, that's interesting. I don't know if it met your resistance piece there, but your next comment says that you put 5K to work. That's pretty legit. Smart move, right? So I don't know if the 5,000 is your entire life savings or if it's a sushi night out in Los Angeles, right? So it could be relative. And just to make sure that drop in the bucket, I think your timing is really sharp, especially if you bought at the end of the day. If you snuck a buy order in, I snuck my buy order in at 355 today. So if you beat me within the 5 minutes before 4 o'clock Eastern Standard Time, you did quite well. And of course, I think probably if you were able to snake a limit order after the market closed, that would have been even more aggressive and even more impressive, quite frankly, because well, I don't know. I don't think there's a lot of people actually buying. My buy order went through like that. They're like, who the hell is this guy from Virginia? What the heck is this? We've been deliberating around sell orders all day. What the heck is this guy doing? Yeah, it was my little order is S&P at 10 shares as well. So pretty cool stuff, man. We got Jess J in the group. Really appreciate your kind comments. Really do. Means a lot to me. Helps fuel the fire. I always contended that when the market ended up in a swoon like this, I would probably pay dividends for a lot of my subscriber base. And make no mistake about it, I do intend on offering that payback to you guys. Absolutely. I'm really not in my element when the market's at an all-time high. I typically just kind of monitor and just ride the wave when it's doing that. Just enjoy being an investor. But this is the in the trenches work. This is where champions are made right here, man. Let me rephrase. This is where investors are made. I've got Gen X Dividend Investor in the group. Can't thank Gen X enough for the quality of offerings, man. Phenomenal timing as well. If you do want a different opinion and support an up and coming channel, I've got a little bet that I think Gen X could or should be at 100,000 by the end of the year. I hope because I always like to see the quality of content align with the subscriber base. And on YouTube, it absolutely does not. It doesn't. Okay. For anybody just wondering. Okay. But phenomenal content, very new channel creator. And I just wish them all the best for sure. Thanks for popping on here on a Monday. I'm just going to shoot it for a quick hour and just roll through as many of these comments as I can. I got Bob Wright in the group here, just an awesome supporter, friend of the family. Absolutely. This is where the weak separate from the diligent, where the weak separate. That's to my point, Kyle, for sure. You really have to enjoy investing to an extent. But honestly, I just think it speaks to your mental toughness. Like if you can't handle this, and reevaluate your risk tolerance, hell, reevaluate your profile as an investor as a whole. Okay. If you can't handle this, it's okay. Be honest with yourself, but make sure you're giving yourself a fighting chance. Okay. Don't just talk yourself off of the market based on what you think about the stock market. Give it a chance. If you're going to make a decision about the market and you're going to say, this isn't for me, this is crazy, this doesn't make any sense to me, great. But make sure and make that decision in calmer waters. And I think for sure, in retrospect, if you do look back on it, what I would wish upon each and every one of you is that you reflect back on this and say, geez, Louise, I really shouldn't have worried so much. I asked my investment dollars to act like investment dollars. And that's exactly what they did for a very violent amount of time. It's been violent. I'll give you that. No doubt. I don't think I've ever seen this before. Yeah, I probably have, but I have a very short memory. I typically just go to work and then I render the profits at a later time. I'm not looking for my the fruit of my labor now. No way. I'm not looking to to render fruit off of a tree that I just planted. Forget it. I'll render that down the line. And again, it may be 6 months from now where I'm like, wow, Ryan, that was a good move. It could be a year. It could be 2 years. Who knows? But it will pay off. It will. You just got to stay tough, man. Down 60 on Occidental. That's a tough one, man. That's a really tough one. Occidental's a phenomenal company, but oil's just getting absolutely clobbered right now. Got John G right below that. And I really, yeah, it's tough. I'm max invested equal weight and energy about 9% right now in the portfolio. And Jesus, I'm glad I'm not any more weighted than that. That's typically the profile that I try to keep is an 8 to 9% exposure rate. That's in line with what the S&P 500 energy sector mimics, basically. So I try to align my portfolio and not get too whole hog on energy. It is really one of my favorite sectors, and I don't know why. I put it up there with industrials, healthcare, financials, technology. I really enjoy investing in those sectors. Utilities has just been really, really good for me. Easy sector to invest in. Utilities is very, very strong and of course very resilient through times like this. It got drugged down today. So there's for hoping for utilities. But yeah, everything just got clobbered for sure. But what Chris Blaine says on what day it is. Maybe it's Friday. I don't know. No, I'm going to go for just a quick hour stint and just thank you guys for supporting on a Monday. But a lot of different things to get off my chest and make sure that the mental game is continuously massaged over, and always trying to make sure that if I was sitting on the other end of the message that I'm speaking to those people. Yeah. Yeah. Because I don't confess to know how you feel. Right. I know it may come across as confident and maybe to some arrogant for sure, but my emotion to this is real. There is none. So you can call that what you will. If you're smart, you'll take a page out of my playbook, because honestly, these are some of the attributes of a successful investor. Those that are shaken by nothing, honestly. This is the investing game. And again, the more you can round out your understanding of what the investing game doles out, the better prepared you're going to be to render successes in the market and deal with volatility like we're going through now. All right, cool. Is it an IQ test to find the channel? Yeah, no, I apologize for that, man. I know I can run my loyal subscribers. If you don't like it, you can unsubscribe and accept my apology. But I was running it as a test, and I thought maybe if I just hit the start streaming button that it would actually work. No, I'm never that lucky. So I'll have to troubleshoot it and figure it out, but I will. A friend of mine here in the UK panicked today and sold out of the market at a 20% loss. He started investing last year. If only he could stay the course. Holy moly, what a comment that is. That free trade to financial freedom, man. Wow, you know, what to say about that? Probably one of thousands and thousands. I just think that the stock market is very, very tricky. It's very, very tricky. When I say that holding is the easiest, most difficult thing, it's the easiest way that I can convey how truthful that statement is, right? And it is. It's very, very difficult. It's not human. It's abnormal to watch that size of capital go down. What you need to learn is the relativity. If you paid attention to the Gen X offering, here I could come on and just cry about my, $15,000 loss today. Again, it means nothing to me. Other than provide me a $15,000 buying opportunity, perhaps. But you know, what if you own a portfolio of 600, 800, a million and a half, and you're down off, 100 and a half? How are you going to react to that? And I think people who aren't prepared for wealth would jump out the window. They would panic, right? Forgive my figurative speaking, but my point is you have to be prepared for wealth. And going through the deliberations of the different thresholds of wealth help you understand and get used to those paper trading activities, right? It's okay if you fall back a few rungs on the ladder and then catch yourself. But if you just take the ladder and jerk it backwards and jerk it off the side of the house and fall backwards onto your back, you're done, right? This whole thing is not an escalator, man. It's not. It is a hike, and it's a hike up the mountain. And you're going to run into difficult times. You really, really are. And you'd be better prepared, certainly, if you're understanding that there's no amount of physical attribute at all that you can deploy to the market and have it somehow help you out. It just doesn't work that way. It's never ever going to help you to be anything less than mentally tough, and that's what it takes. Mental toughness. Again, maybe I'm weird. I don't know. Jamie called me weird on Friday. I don't know, but I can tell you this: it is absolutely a page out of a successful investor's playbook to deploy. And I encourage each and every one of you guys to incorporate that into your lives, man. It's that important. All right. Yeah, my heart goes out to that situation for sure. I do think there's a lot of panic selling. I mean, in retrospect, I'm down about 18% right now. I've run through the half-life deliberation many, 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 many times in practice. And practice, baby, makes perfect. All right. And the last damn thing I'm going to do is practice, 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 only to get into the freaking game and fail. That's not going to happen. Okay. We're not asking you to mentally condition yourself to be a savvy investor in theory. We're asking you to be a savvy investor in reality. Okay. Make no mistake about it. I came on this Monday to introduce you guys to this reality, because this is the reality. This is the way of it. Okay. And I'm having some fun monitoring the YouTube landscape to see how they're actually covering this. Because I would contend that there's probably a lot of newer investors within 10 years that were probably mentally ill prepared, but probably physically thought that they had this stock market licked. All right. And they're just getting a little bit of a lesson. And there is good that can come out of that. There really is, as long as they can get over themselves and realize the inherent lesson and come out of it stronger. We'll see. The verdict is still out. All right. Dang, free trade. That's the wrong move to make right now. Yeah, I actually point out the courage that it takes to come into a live stream and offer that, certainly. But to each his own. Everybody's got their opportunity to do what it is that they want to do with their money. Man alive, it would break my heart to know that somebody came in and said, Ryan, I've been following you for 3 years and you've ill prepared me. I feel ill prepared to go into whatever the stock market has to dole out over the next few weeks, months, years, or multiple decades with what you've taught me. That would break my heart, because that's not the truth. That's not the truth. I offer it plainly and openly. There's a ton of other channel creators as well that offer their content openly and freely as well. And if you listen hard enough, you're gonna pull those lessons out of those things. I watch the Gen X dividend investor with my lens, and nobody gets to watch it with my lens other than me. And what stuck out to me, was really interesting to me, is his discussions about some of the purchases that he's made in his life and which wished he wouldn't have made. I'm not going to get specific. I don't want to irritate his wife, but and that takes some courage, man, to come on and admit to folks, even though you don't have to do it, to like, hey, man, maybe you can scale back and circumvent some of these mistakes that I've made. That's what resonates with me, honestly. Because not everybody's going to have $1.5 million. I think the point of that video was that everybody could. And in theory, yes, everybody could. But to my prior point, you've got to be able to take your theory and put it to reality. And if you can't transition to game time, you're probably not going to render a whole lot of success in the stock market. And success right now at its core is based on holding or doing a little bit of strategic buying. That to me makes the most rational sense. And I miss George Carlin, the late George Carlin, but I've got George Carlin coming out my ears. I'm just a realist, as firm can be, with my 2 feet planted on the freaking ground. And that's just what I see right now. Those are the only 2 prudent moves as far as I'm concerned. All right. Gen X says he's at the playground with his kid. That's rock on, man. I've got soccer practice tomorrow with mine. So yeah, he's enjoying the finer things in life. That's what it's about. Take a page out of the playbook, guys. That's what it's all about. Oh man, that's sad. He's talking about the trade. When I cashed out some stocks from my taxable brokerage account, my broker told me to take taxes out right away, but my CPA is saying if I do that, I have to pay taxes twice. Is that true? Negative. I think the intent there was to put some money aside to make sure that you can cover when you do next year's taxes, assuming that you sold this year. Okay. Very simple. It was crazy. The market's down 7%. It is. It is. I'd rather have it up 7%, to be honest with you. But I got Christian Gonzalez in the group here. Thanks for making your way in. Boeing's down so low. It's insane. Really. I've just been really picking some bad stocks. Great companies. Have been picking bad performing stocks over the last year and a half. I've had some winners for sure. But holy smokes, Boeing, I bought it and then it had the 2 accidents and just poor timing for me. I still own the company and I was considering doubling up on the position, but I've just exercised my right to hold the company at this point. Just I'm being very, very selective with my buys for obvious reasons. I'm not throwing a whole lot of money to fate right here. Just looking to up some of the quality positions in the portfolio. And Boeing, for anybody who doesn't have an initial position in it, so be it. But my 10 share position is down fairly good, and my industrials sector exposure is right on point. So I don't want to add any more to it. That's just what we're doing. I still have 10 shares. I'm happy to own the company. It's fine. It'll be fine long term. So we'll continue to fight another day there. I have some cash ready to deploy. Andrew, nice, man. So that's what you got to do. Somebody took somebody's advice at some point when they said maybe push some cash to the side at some point. I don't know. I seemingly remember somebody over YouTube saying that at some point over the last 3 years. I don't know who. Anyway, but what are the best two dividend stocks to buy at current levels? Sure, Johnson and Johnson, number one, comes to my mind as far as dividend paying stocks. And to give you one in another sector, I really would throw 3M in that category. I could give you some others. Obviously, Caterpillar. You don't have to look too much further than the Dow components, really, at this point. I think you could probably trip and fall into any of the Dow components and win long term. But you ask me about dividends. And 3M and Johnson and Johnson certainly very healthy. If you start to get up into the little bit more dividend centric names, I think I'd stay away from financials. I know you guys know I bought some a little bit, but as far as that question goes, Pfizer certainly rings the bell. AbbVie is a name I don't own right here. I do own Merck, Pfizer, and J&J in the healthcare, and then with my new position in Walgreens Boots Alliance, I'm not going to buy any more. But certainly AbbVie is a top quality dividend name. I don't know what it's trading at right now, but one of those two. But I think I would opt for J&J in the healthcare, so that way give you another name in industrials with 3M. I can't think of any better company to rock and roll with than those two right there. Yeah, you betcha. And, just keep in mind, I'm not a financial advisor. I can't give financial advice. What I'm doing is answering the question in the context that I've bought the two myself. So you can do what you want with what you want. I'm telling you what I did. Therefore, if you want the page out of my playbook, I just gave it to you free of charge. All right. All right. Don't come back and throw tomatoes at me if it ends up going down more. Okay. Anyway. T, if it's taxable. No, if it's not true. Two right. FFI is literally in and out. Boeing is having to rewire the planes. That is part of the reason. And that could be, it's nice to know and encouraging that they're on track and troubleshooting that. I know they've had it earmarked and the engineers have had it earmarked as an electrical issue. And that's a good thing, I think. Hopefully they come out of it, typically, guys, and I hate to say this, typically will come out of tragedy in any industry smarter than before, and they'll deploy lessons learned in this. They really will. That transcends any industry, and Boeing is no different. They'll do the same. They're a phenomenal company. They'll do that and incorporate those new initiatives into the protocol. So. I think this may take some time to recover. I agree with that. I really do. An open-ended comment is potentially 6 months, a year, 2 years. Again, I earmarked all those as realistic timeframes. I could be wrong, and it could be 2 weeks, right? I don't know. And it just comes back to my definitive of, I think there's a pulse of truth in what you speak of, Christian, with regard to taking a little bit more time to recover because of the damage that's been done. I think number one, and there's still a potential threat for this to grow and really start to affect bottom lines of companies, right? The flow of commerce has to move. And if you start to affect companies' bottom lines, that could be very troublesome and problematic. And that's when we need to start talking about the R word. And that's when things really get ugly. Not that they're not ugly in the context of the last 2 weeks, but that's when we start talking about the R word, when companies really start to suffer. The irony in all that is just 2 months ago, we had every single pundit on, every single stock analyzer, every single market commentator basically pledging that there was no way possible at all in the stock market that 2020 or 2021 would call for a recession. Now look where we are. Amazing how things can change, huh? It's really amazing. But I think you probably got a root of truth there for sure. Deaths are like 17 in the U.S. That is. I think it's a little more than that, actually. I thought it was like 43, but no. Worries, my heart goes out to each and every one of those folks. It's just it's tragic, but in relative terms, there's a lot of different things that can expire somebody. That's for sure, and it happens every single year. You got to protect yourself and be careful, especially amongst the elderly community for sure, which seemingly this thing kind of has a nose for at this point. All right. I'm buying all the stocks. The US dollar will crash. That could be debt related with that. Again, with the definitives, I'm not really sure, where that's coming from. I'm very interested actually in some of the doom and gloom folks that talk about, our ability to drive the value of the dollar into the ground based on hope and rise and increase the national debt. So there's some truth to that for sure. But he says keep plenty of cash right below that. It's kind of funny. Oh, no, that's the US dollar will crash. That's Treatum Finance, and TWRW is a green day. Why is your broker taking taxes out? Yep. I can't figure out why the Canadian banks trashed so hard when their exposure is limited to oil, but I'll be buying. That's an interesting place, Kyle. I kind of did a reevaluation. I parlayed back on my financials at the time and took just a touch of profit that I had, and I currently don't own them. So interesting you would say that, but yeah, they were fairly attractive when I sold them. They were just now they're probably a heck of a lot more attractive, probably close to single digits PE, I'm sure, on each of the big ones, Royal Canadian and the other one. So TD, Toronto Dominion are the two big ones there. So thanks for sharing, Kyle. I appreciate it. Happy hunting. I know you're a opportunistic buyer, so enjoy yourself. Talk to your broker as to where he put your tax money. No doubt. How about you don't use a broker? Use a broker. Just go self-directed, man. That's what I'm all about. Rubbish. It's the fan. I can't seem to understand why. Kyle, yeah, paper profit now. Losses are vanity, and dividends are sanity for me right now. That's a really good point. Freedom to financial freedom. I think you're one of the channels I subscribed to this week. So apologies it took me so long, but I think I did subscribe to your message. You can fact check me if you will, but I'm pretty certain I've got about 19,006 subscribers with my channel. So a little channel that could, by God. But anyway, yeah, it's a really smart comment, and I do look at it that way. It's kind of an entry level thought process, in that it is paper losses. You're right. You never render any losses until you sell, and that's the important part of this gig. Is that you just continue to hold through the volatility and be an investor, guys. Be an investor. This is what you signed up for, okay? Hidden Freedom Investing says it's a bonus stream. It is. I'm glad I crashed and burned. Too bad I crashed and burned on my thumbnail, though. That's too bad. This one I'll have to monetize after the fact, and anybody after who watches it will have to endure the 20 commercials that the YouTube puts into my live streams, but that's all right. Yeah, JPM's below 100. So Kulik 21 says JPM stock is low. I concur with that. Don't care for the CCL. Laugh out loud. I don't know, man. It looks pretty tempting right here. That's yeah. That is going to be one of those where you look back on this time and you say, why didn't I buy it? Guaranteed. I mean, I'm telling you, at $23 a share, that's insane. And it is a phenomenal company. It's the largest. It's the preferred choice for some of the younger crowd. And as they start to win those businesses younger, those folks are going to age and they're going to branch into different demographic. Honestly, as the population ages, cruise ships are going to benefit from that here going forward, no matter what. That momentum wall is way too strong, and it's moving way too favorably in the direction of the cruise lines, in my opinion. So I currently don't own CCL, nor do I own Norwegian Cruise Lines, nor do I own Royal Caribbean, but I think those are the top three players. The only cruise line that I own right now is Walt Disney. So, and it's getting crushed too, if you haven't noticed. What is the purpose of buying all Vanguard sectors, as you mentioned on your previous podcast, when you can just buy the whole market VTI? Um, sure. So I currently don't actually own VTI. I own it for my kids. It's kind of a one-stop shop product, and I do own the S&P 500 certainly, but I thought it was an interesting play on M1 Finance to basically fund that account and have the unique funding opportunity through M1 Finance always flow into the out of favor sector. And portfolio is performing quite well before this downturn. I do have long-term goals for that portfolio. Eventually, I'll bring that home and I'll consolidate my brokerage accounts. Right now, I have 4. They'll consolidate down into 1, and I do anticipate that that'll actually be part of that major broker at the time. And super long on my holdings. It is somewhat experimental in nature. I do admit that. It is not a run-of-the-mill way of investing by any means. But I thought it was an interesting play on M1 Finance to allow fundings to flow into the portfolio and to always be moving into the lowest sector. And it's a cool way of doing it. Conversely, the other M1 Finance taxable account, I do something similar with my 12 growth stocks in there, in that I use the partial share opportunity in there to invest in 12 of companies that I don't really want to own. I don't want to own that volatility within my Roth IRA. So I own those long. Same idea with the portfolio redistribution of funds. As funds flow in there, they slowly accumulate the lowest holding in the portfolio. So it's actually kind of unique to M1 Finance. To each his own, certainly. And it's just one way of seeking exposure to the market. I think the way I'm doing it is actually the most prudent way of doing it. I find that a lot of people want to own single sectors, try to, invest in just utilities and just technology or one or the other. I thought it was a cool way to build a portfolio of the total market and actually allocate a little bit more to the sectors that I wanted to allocate a little bit more to, for example, technology, and then allocate a little bit less to the sectors that I wanted a little bit less in, for example, materials. Okay. So those are some of the strategic thoughts that I put into it. And again, it was a kind of fun. Wanted to try it out, and it just seemed to fit like a round peg in M1 Finance. So we initiated. I like it. I think it's a cool passive way of investing, and we'll see. Those sectors actually are running about a 9 to 10% clip, each and every one of them, year over year performance. So it just goes with the idea that each of them perform solid as individuals, but with M1 Finance weighted in the way that I want it, it'll always continually fund the out of favor sectors. So when the sector rotations occur, I'm typically always benefiting from it. And that's the cool thing about owning all 11 is that you never miss out on any of the appreciation. Of course, you catch all the depreciation, but that's the idea behind that. That's a heck of a statement. Thank you, Michael Sadai, I believe. That's a cool comment. I appreciate that. Thank you. Microsoft increased their dividend today and is up 3% after hours. Wow, nice. That's good. That's good. I entered back into a nice position in Microsoft CCL 5.03, and I was low on that. Thank you, Jamie, for catching that. I appreciate you offering that. That's awesome. Microsoft and Canadian Imperial Bank increased their dividend. That's awesome. If it bothers you, don't do it is excellent advice. Well, that is true, Scott. I do agree with that. And I don't mean to be rude, because that comment can really be misconstrued. I just think if you have the capacity to toughen up a little bit, do it and still do it. Don't listen to somebody like me and have me sit across from me and be like, man, Ryan just said, I can't handle this if I'm feeling emotionally drawn from this. And it's okay to freaking feel the way that you're going to feel. It's just that do what do what it is that not everybody else is doing. Okay. While everybody else is selling down 20%, or if they're down 30 or 40, they're selling whatever, or they hold on to the very end and then sell and the market finally turns around. Why don't you do the opposite? It's amazing how when you do the opposite in the stock market, it typically is the right decision. All right. While everybody's selling, you can step in and do a little buying. When the market is down, don't sell, do a little buying or hold. While everybody's panicking, be calm, calm down. I don't get it. I think there's a lot of money to be made in the news media. I really do, and I think they'll just jump on any topic out there to make the almighty dollar. And I think that people who consume that and can't filter out the BS are really they're very easily influenced, and I think that's unfortunate. But we can't save them all, I don't think. My man Scott, the usual suspects are here. Awesome, very cool. Microsoft is one of my biggest holdings. Rock on, phenomenal company, probably the best single technology company you can hold. You jump Apple up there with that discussion as well. And there's a pretty good list of stocks that I'd love to get Gen X dividend investors' perspective on, as well as a bunch of these other channel creators as well that he and they don't invest in. Cisco is one of them. I'd be interested to know what the deliberation is on Cisco for sure, and why you opted not to invest in that company. There's a bunch of others as well. But another discussion for another day. I kind of wanted to keep this around an hour, guys. I'm going to try to get through this. Hey, Kay, haven't been in here in a long time, but thought I'd join for a few. Rock on. I appreciate your time, Scott. It's awesome, man. Really do appreciate it. I need to search the seat cushions for uninvested money. Please do so. You have my full endorsement. Dow going through 20,000. So Hoofix, man, Martin, you're full of all kinds of definitives. I appreciate it. I love an open community, and hell, you could be right. Who am I to say? I just typically don't. I don't usually pat the head of somebody who's so definitive on exactly where it's going, because in my experience, usually when you talk in definitives, you're usually wrong. So, and you'd probably agree with me, or you can think I'm a jerk for saying it, and no, you're right all the time. But we both know that's not true. So. All right, getting to the end here. Walmart's held up quite well. Absolutely. Live chat. Eric Weber just popped in for sure. It's awesome. Microsoft is losing the Jedi contract. that's true. Community. Scott, it's community, bro. You, Matt Money, as a passive income investor. Absolutely. How's it going? I got Riley Griffith for sure popped into the group. Awesome. It's great to see you, man. Great to see you. Just kind of rounding down to this discussion anyway. I'm combing through these last few comments on the stream. Honestly, I apologize for the quality tonight. Not very good quality as far as the lighting. I didn't get to adjust it before. I just turned it on and threw down. So I do apologize, and I apologize at the top of the stream as well. Try to get that OBS dialed in so I can actually do a live stream and actually surf the internet at the same time and really show you my deliberation. You're going to benefit from that. You really, really are. It's going to be a lot of fun when we start to open up the envelope on how it is I deliberate, especially in a down market. We'll all be looking to grow wealth together. That's the whole point. This isn't about me. It's about you guys. All right. Sell in the green, come back and market in a few. It could be. I'm having a hard time finding any green in my portfolio, but that's fine right now. Hey, everybody, I write a blog about the market. Rock on, man. Andrew Ryan sharing some blog opportunity there, man. You guys kick over. He left a link in there too. So I'm not going to vouch for the content. I don't know how good you are, Ryan. It's the first time I've seen you popping in here. Andrew, I'm sorry. But certainly you guys are welcome to kick over and check that out. That's awesome. Appreciate your time kicking in here. You said it was tax. Okay. December 2018 low. I know, man. We went back in time here on this market. It's been pretty awesome. I'm annoyed that Oxy might cut their dividend. Yeah, I know that's tough. It's really tough. And that's the that's the downfall of dividend yield is, you pick that stock that really just falls on bad time, and then you're stuck with a subpar company that doesn't seem so attractive anymore with a cut dividend. So yeah, got to be tough on that. That's tough, man. I've swallowed a few of those pills too, man. General Electric. I took AT&T into a pretty good swoon. Of course, Kraft Heinz food has just been an absolute disaster. I don't know what those idiots are doing on that board, but they all need to be fired. They all need to be fired. All they have to do is sell a lot of Velveeta to people. It's not that difficult. I love Heinz ketchup. It's not that hard, man. So, but they're screwing it up. I hope the Lear jets are working well for them. So you're saying this is most likely the bottom? Yeah. Did I not make that clear? There's been a few educated guesses in the group here. I will refrain from providing any type of educated guess here. I do think this is going to be a little more short-lived than people are saying, but that's just my thought. And I've been known to be wrong, and I'm prepared either way. It doesn't really matter. Money is evil. My policy of not buying oil or financials is paying off. Sure, it certainly could. And it's interesting you say that because everybody's got their own tendencies. And I could make a couple of arguments for why that's a pretty interesting approach for sure. I'd like to know what you do invest in. But certainly financials has just been terrible, and energy's been the same. That's why I typically like to weight my portfolio in a manner that doesn't quite heavily weight me. As a matter of fact, I have a fairly low percentage in each one of those, financials and energy, respectively. I think the bulk of my holdings typically is a little bit more weighted toward utility. Technology certainly is number one, fits my growth profile. Healthcare, industrials, and staples and discretionary. And I do have an affinity for telecom as well. So, you can control that rate by having a little exposure to it. You wouldn't be tempted to pick up a little bit right here at these valuations. Money is evil. It's a rhetorical question. Yeah, it does speak to people's preference about what they feel confident in, and that's the beauty of it. If you don't like a specific sector, don't invest in it. You know, certainly, I would imagine that you probably don't cry about it when they do well. They did well last year, and here they are back off their mark again with interest rates falling, and probably will be cut again. I disagree with both of those notions. I don't think interest rates should have been cut. So I've been throwing money in daily. James Parker, I like it, man. That's pretty rocking. That's the way to do it. Sleep well. This shall pass. Good stuff, guys. I just had a bomber of comments pop in there, that of which I'd have to stay on board for another 2 hours. I refuse to do that on a weekday. I refuse to do that to you guys. I absolutely would come on a little more frequently during the week. If you do like the live stream, certainly I'm open to feedback other than the Friday live stream. I think that does provide a nice 2-hour window to come on and rap about stock and the market. But today being down 2,000, I certainly wanted to offer some level of communication to the subscribers on the channel. Obviously, if you're not subscribed, you're not going to get this level of notification and engagement with myself. Hopefully you guys do find value in it. I find value in it for me. It's amazing when you are so engaged in a topic to the point where you start to teach the material, how much better off you can be as an investor as well. So holistically, I think we're all benefiting from the message. But with that, guys, I will sign off for sure. We'll keep in tune with the market. If there are anybody that want to jump on the live stream with me on Friday, I do run that as a collaboration. Every now and then I'll come on and do what I did tonight and do the live stream solo, which in my personal preference, I do enjoy when the timing is right. But I'm also starting to become a little bit kin to the collaboration that I run. I think it provides an awesome opportunity. I floated a few invites for some of the new channel creators as well this week on some of the replies on some of the videos that you guys commented on. Take me up on that, man. If you're serious about YouTube and putting yourself out there, hey, at least you can speak to my audience. Typically I get on and I'm looking to speak to the loyal folks in my audience, no matter what those numbers render. But if you have the opportunity to talk to a larger audience, man, take advantage of the opportunity. You might be glad that you did. So with that, guys, I'll be signing off. You guys take it easy. Enjoy the rest of your evening. I'm going to go eat dinner. All right. I'm starving. So you guys be well, stay positive, stay grounded. Deploy two of my recommended techniques. Either hold on this market, and if you're a little shy on extra cash, no big deal, man. Spend these next few months saving up a little bulk of cash, and you'll live to fight another day. And long term, you'll want to prepare a little bit more in advance of these opportunities, because this will not be the last opportunity that we ever get to experience some volatility in the market. So this too shall pass. Stay strong. Hold for the long term as well. And keep your eyes and ears open for some more uploads. I've got a bunch in the queue ready to rock for this week and into next week. But certainly we'll see all of you guys next Friday or this Friday on the live stream. I look forward to it. It ought to be a doozy. You guys take it easy. Be well.